he owned Fort Knox, and he decided to turn it into a video game store. And now he's back to sticking to his knitting and turning this thing into another, into a money engine again.
Yeah, you're right in that he always seemed aloof towards investors. And even before that, he seemed aloof towards the idea of even going public as a company. But someone got to him, some investor somewhere or something that made him say, okay, I will stop hunting this great white whale of the metaverse and I will please the investors. And I don't know if he did it unwillingly or under duress or whatever, but it earned him tens of billions of dollars in personal wealth.
Okay, let's talk about another one, an interesting one now, because of its impact on Silicon Valley, is Google. Google reported first quarter earnings that beat all expectations on the top and bottom lines, and even so successful that it immediately authorized a $70 billion stock buyback to keep driving the stock up. Its stock rose as much as 5% this week. Okay, I'm hearing that on one end, good news for Google, and they were seeing more advertising revenues too. So that's a good sign because, that's their business. It's advertising, not search. Anybody who studies Google understands that. But what's interesting, we're hearing at the same time, Google seems to be backing off on its new headquarters center in the center of San Jose. Hi, everyone, and welcome to the Friday, April 28th installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. Okay, Scott, I want to get a little bit off of the Valley for a second here, but it's a very Valley kind of story. But we watched Silicon Valley Bank collapse over a weekend. First Republic, which had an absolute beautiful reputation around here. I've known a bunch of people that switched to First Republic because the service was good. Everything about the place was first class, and now it's dying. And while we're talking, it may die. This is an incredible story. And as it happens, I was kind of privy to the inside of that company because about a year and a half ago, they asked me to, 2 years ago, they asked me to draft their annual report. It was their big anniversary when their founder was leaving. So I got to see all the numbers. To talk about loyal depositors, solid growth. They seem to be the blue chip of banks around here, the same way Silicon Valley Bank did. But Silicon Valley Bank got itself into serious trouble from its own actions. First Republic, it seems like it's just got caught up in the blast zone and took Silicon Valley Bank.
Yeah, a little bit of the blast zone, but a little bit on its own accord. And that's what we're learning as we start to see these numbers. And it's a similar story. SVB had some regular old depositors like you and me who certainly kept their accounts at $250,000 or below. But the majority of their depositors were... But the majority of the depositors were much higher because they were startups and VC funds and things like that. But like you said, there were a lot of back and forth between the two banks. And First Republic, even as of late this week, as you and I talk, had a majority of depositors that had money above that FDIC threshold because so many of them were, again, startups and venture funds. And they got into trouble as interest rates went up. Their investments lost value. And if you look at the stock price, which was trading above 120 maybe 6-7 weeks ago, over the last couple of days, it's shed almost all of its value. It was a $5 stock as of Thursday morning. And this may be another situation where heading into the weekend, the fate of this bank may be decided because it's really, again, a situation like SVB where panic seems to be trumping fundamentals.
I always got the feeling that Silicon Valley Bank was startups and VCs, and First Republic was wealthy people of Silicon Valley and San Francisco, the people who live in Woodside and Burlingame and Menlo Park and that sort of thing. And they were they were over the limit because they just had a lot of money to deposit, you know.
And that may be the case.
Boy, it may be a penny stock by this weekend. It's getting very close to that.
Right. It's about the level where the government took over SVB and again took it over, shut it down, and then SVB was bought by a larger bank. That's one of the scenarios that may happen to First Republic. Talking to people who work there and they're all very nervous and there's so much uncertainty right now as to what the future holds because they're in this kind of panic selling situation. But yeah, if it's interesting that you bring up that there were some wealthy individuals involved in depositing money at First Republic. Do you think, because we don't know, that might make the scenario a little different when it comes to protecting those assets, a la what the government did with SVB?
But rumor is that Janet Yellen nixed any kind of bailout already.
And that would be different. That would be a different scenario for those people and their money.
Yeah, well, let me read you some of these numbers. At the end of last year, First Republic had $213 billion in assets, of which about $167 billion were in loans and $32 billion in bonds. $102 billion of its original deposits. That's everybody got out of there. I mean, those are nice looking green, empty banks right now, empty buildings. They've added a tremendous amount of short-term borrowing, which climbed to $80 billion by the end of the first quarter, and by $30 billion, which I've never heard of this term before, pity deposits from 6 big banks to give it a lifeline. So what do you think? What are the odds? I know a guy at a startup who was on the phone for 10 hours listening to hold music at Silicon Valley Bank, and he never got through. Is this going to be another one of those weekends?
It seems like it will, only because investors have fled. People that were depositors fled to the tune of $100 billion, like you said, to the point where they're largely standing on the legs of a term I hadn't heard either, pity depositors. That's not good when you're calling, your lifeline a pity deposit. And so, yeah, I think this weekend is going to be huge and really determine the fate of this bank going forward, and maybe even determine the fate of its depositors that are still within First Republic. So it's a huge question mark over the next few days. And by the time you and I talk next, there may be some, in this term, the word closure may be all too real.
Yeah, an unfortunate term in this case.
Right.
Okay. Now, interestingly, we had quarterly earnings come in this week. Impressive. Kind of a surprise. And I mean, not just that these big companies began to turn things around. They've laid off enough people. They pretty much guaranteed they were going to have profits. But they started showing improvements in ad revenues and actual business sources. So we had Meta, which stock rose 14%. As the company recorded first quarter results, unbelievable. Their year of efficiency seems to be working, and more than that, they saw money coming in from ad revenues. So is this actually the year of efficiency paying off?
Very much so. Meta was, and we talked about it before, a cash factory for years and years and years. And then Zuckerberg decided to spend all this money, tens of billions of dollars, on the metaverse. And the stock absolutely tanked because the metaverse didn't show results like Instagram and WhatsApp and Facebook itself did. So by cutting way back on the metaverse and doing this whole year of efficiency thing and laying off 21,000 people, Mark Zuckerberg and Meta are pointing back to the ones who brought them to the dance. Instagram, Facebook, and WhatsApp, they are still making a lot of cash. Meta stock, and this is a staggering thing for a company this big with this many shares on the market. In November, it was trading at $86 a share. Here we are in April, it's trading at $238 a share, not because it saw a whole lot of growth, but because it shrank and called this thing the year of efficiency. And that's a big difference from move fast and break things. So it did exactly what investors wanted to see, which was slow down the spending on the metaverse. And boy, did investors reward that company and its shareholders.
Yeah, it kind of surprised me. I think we assumed that Zuckerberg wasn't listening to the world's advice, especially the markets. I mean, for a while there, it seemed like he owned Fort Knox and he decided to turn it into a video game store. And now he's back to sticking to his knitting and turning this thing into another, into a money engine again.
Yeah, you're right in that he always seemed aloof towards investors. And even before that, he seemed aloof towards the idea of even going public as a company. But someone got to him, some investor somewhere or something that made him say, okay, I will stop hunting this great white whale of the metaverse and I will please the investors. And I don't know if he did it unwillingly or under duress or whatever, but it earned him tens of billions of dollars in personal wealth.
Okay, let's talk about another one, an interesting one now, because of its impact on Silicon Valley, is Google. Google reported first quarter earnings that beat all expectations on the top and bottom lines, and even so successful that it immediately authorized a $70 billion stock buyback to keep driving the stock up. Its stock rose as much as 5% this week. Okay, I'm hearing that on one end, good news for Google, and they were seeing more advertising revenues too. So that's a good sign because, I mean, that's their business. It's advertising, not search. I mean, anybody who studies Google understands that. But what's interesting, we're hearing at the same time, Google seems to be backing off on its new headquarters center in the center of San Jose. Now, if that's the case, I mean, you and I start talking about that Google site downtown, which was going to completely transform San Jose, 3 years ago? We were talking about it, and even then the place was filled with cranes as developers and speculators bought everything around that 40-acre parcel. And it was creating a mini boom of condos, stores, everything else. And now Google looks like it's not going to do it. And San Jose's stuck with this pig in a poke. I mean, what are they going to do with this crater in the center of town?
It's as someone who went, toe-to-toe with the mayor who insisted everything's fine during a news conference and called out me specifically for saying, hey, you're making a mistake here. And I had to fight back and say, even Google responded to my tweet saying, yeah, we're reevaluating. They say they're still committed. San Jose won't admit that. Google says it's still committed. I'll give them that. But the cranes have backed off, leaving piles of rubble in downtown San Jose. That doesn't look good. That's the opposite of progress. When you tear something down and then leave for a while because you're reevaluating, who knows what that is? But that's sort of a metaphor for Google right now. They are doing okay ad revenue-wise right now. But the future is a question mark because the future involves AI, and Google hasn't proven that it can beat either Microsoft or some of the other guys, a la OpenAI, Facebook, et cetera.
But they seriously missed the boat. And the last big company that missed the boat that bad was Intel with mobile chips versus networks. And
Intel
not recovered.
I was about to say Intel has not recovered, just reporting its biggest quarterly loss ever. And so Google, which still continues to make a lot of money because of the ad revenue, really needs to right the ship when it comes to AI and figure out how they will supplant AI into its search engine, which is its dominant way to make money, and still make money. And that's a big question mark, whereas Microsoft is already giant and it's bringing back Bing, for goodness sakes, and has just seen its stock price soar. So Google is a big question mark, especially right in the heart of Silicon Valley right now.
Yeah, I mean, maybe San Jose gets its own Central Park. I mean, just plant grass seed out there. I have no idea what replaces that. And I'm struck that the city of San Jose played hardball in those negotiations for a long time. And if they had signed on the dotted line 2 years ago, that whole center would be almost done by now. And instead, I mean, who's big enough to move into that space down there? Unless Disney wants to leave Florida for good, not listen to Nikki Haley go to South Carolina, but come out to Silicon Valley. I don't know what goes in there except just wait another 25 years for more office towers to fill it.
I don't know, but even Google in its statement said, we are committed. This is a 15 to 30-year plan, and that's a long range plan. Yeah.
Well, you can tell my ghost about it in 30 years. We'll see. I mean, I think San Jose blew it on this one. First of all, you don't bet the store on a single company, which is what they were largely doing. And then, create enough impediments that the negotiations get drawn out forever, because there are business cycles. I think people tend to forget there are business cycles in this valley. There have always been. We went for a number of years without one. Okay, so finally, Microsoft. You mentioned Microsoft and how well it's doing. I'll go through that one real quick, but they've had good enough news that their stock's up 3%. They had good numbers. Microsoft is an interesting company because, it reported cloud service revenue growth 27% year over year. Now, I thought cloud had kind of peaked, but apparently they've got it going well. Revenue's $53 billion versus $51. Earnings per share $2.45 versus $2.23. That's pretty good numbers for a company that size. So Microsoft looks like it's going to be one of the major players again and for a while, especially with AI.
Yeah, this is an amazing story. I mean, Satya Nadella really turning the company around, and it's a giant company to turn around, focusing on what it does best, software and services. The stock price has been on a huge boom lately, number 2 in the entire country to Apple in terms of market cap, and now somehow stealing the AI crown. And I say this very early in the AI game, but stealing the momentum from Google and somehow bringing back Bing of all things. It's just been an amazing run for Microsoft, and this latest earning report is just further evidence of that.
Do you think Microsoft stays in Seattle? Stays in Redmond?
Yeah, I mean, I don't know.
That's a hard city to do business in right now.
I just don't know where else it would go. And, we just spoke of Google in San Jose. It's geography, I think, means less than it did before in terms of having a headquarters, because these companies are not only spread all across their state and their country, but even the globe. And, it's like saying, well, technically, Oracle moved its headquarters to Texas. Okay, but the Emerald City is still up the road in Redwood City, and everyone sees that. So I don't know if a company really needs to announce where its headquarters is anymore, especially with workers spread out so much.
Microsoft may be thinking twice, especially when they got money to burn right now. So we'll see. Okay, next. Layoffs. How can we have a booming stock market and companies doing well, and other companies are still doing layoffs? How does that work?
I think a lot of the boom you're talking about came during the pandemic and the lockdowns, and that's where these companies boomed, and we're still seeing some of the effect of that in the quarterly earning reports. But the boom is not nearly as rosy as it was, and these companies realized it was
widespread.
Yeah, I mean, the boom was there. It's not as strong, and companies just have to cut back because their sales are not as strong. And so I think you're seeing a whole lot of trimming going on right now. And that's what happens. We saw the interest rates hit banks. I think we're seeing them hit the tech companies as well. And it's sort of a slight delay for it to hit these tech companies, but they have to trim because their income and their investments are not worth as much, just like the bank's income and investments is not worth as much.
Yeah, it kind of strikes me as a bad omen. The big companies, the really big companies, are now doing great. Their stock's up. They're doing stock buybacks. The smaller companies are still struggling, like, Lyft and Dropbox are the big ones this week. They're not doing as well. So the big companies are getting bigger. The smaller companies are getting smaller. And the startups, venture capitalists aren't giving out any money right now. So the distortion that happened since the turn of the century looks like it's increasing. The valley is becoming more and more top-heavy, run by major corporations. We're not seeing that explosion of entrepreneurial startups we usually see at a time like this. And that doesn't augur well for the valley's health, in the next 2 years, at least, unless we start seeing some action out there.
Right. But I think the public markets are partly to blame for this. I mean, if you look at a Lyft or a Dropbox, why are these companies even public? They're small niche companies that should be owned by bigger companies. And I remember getting told this by the great Carol Bartz when she was running Autodesk, saying,
Legend.
yeah, Silicon Valley works like a farm system. And the big companies, a la Autodesk and, the Intels and the Oracles and all those, are the main, teams in the major leagues. And the other companies are the farm teams. And they don't need to go public. They get bought. Everybody gets paid. The technology and innovation goes in. And, everybody sort of gets a new lifeblood, a new injection. Instead, some of these companies, and there are so many of them. Goodness. I mean, I'd throw Peloton in there. I might have even thrown Twitter in there. They're small. They don't deserve to be public. And eventually they pay the price because they can't last. And in terms of, making enough money, Snap, another one, goodness, Snap stock now below $10 a share. Why are these companies public? Why are they trying to play in the major leagues? Steve Jobs famously said of Dropbox, you're a service, not a company. And Dropbox has been fighting that ever since. And Dropbox, one of the companies that just announced major layoffs. So part of the problem is I think that all these small companies want to play in the major leagues and maybe they shouldn't be there. And so that stunts the VC funding because the exits are getting a little bit lower. But I would push back a bit. I interviewed a venture capitalist just today who said he is seeing some funding going to startups and those startups need to hire people. And his advice to those people at the bigger companies that are getting laid off is take your experience, and your cashed in stock options and whatever, and go somewhere small and lead those companies because they need to hire.
Well, that's good because if you think of those companies like Lyft as being AAA ball before they go up to the majors, we need single A. We need a lot of single A ball. We need a lot of players trying out to see if they can make it to keep moving up the ranks. And if we don't see, thank goodness, if he's correct that they're starting to see some startups being funded, that's the most important sign, I think, of all, because that defines the future of the Valley. So we'll see. Finally, before we run out of time, the penny that never disappears, Elizabeth Holmes. You have spent a measurable percentage of your professional career covering the fate of Elizabeth Holmes.
Yes.
And now she's going to get another chance?
Sort of. This is a last-minute Hail Mary appeal. Elizabeth Holmes was ordered after failing several appeals. All of her appeals have been turned down since, she was sentenced to 11 years in prison. Told by the judge to report April 27th, which is the day you and I are talking, by the way, to prison. On April, I guess, late night, April 25th into April 26th, filed the last, not even last minute, at this point, it's last second appeal. And by the rules of the court, that appeal has to be ruled on before she goes into prison. So again, every other appeal has been rejected. There's no, it would be a surprise, let's say, if this appeal somehow gets something overturned. But she did have the right to appeal. The state has to respond within 10 days. Until that response, she remains out on bail, waiting to see what the judge and the state at this point says about that appeal.
Did she appear in front of the judge, or is it just a filing?
It was just a filing.
Okay. So Sunny Balwani has been in Stony Lonesome now, marking off the calendar. So he's actually putting in time right now, but she still hasn't seen a day without bright sunshine.
Right. Now, her reporting date was later, largely because she was about to have a child, which she has since had. So Balwani was to go in earlier, but he actually staved off going in by a couple of weeks with last-second appeals as well. But like everything that came before it, those appeals were turned down, and we expect, again, this would be a shock if Holmes had an actual reprieve on this last Hail Mary appeal. But we don't yet have a date that she goes in. Check my Twitter account. I'll update it for you.
So hopefully you won't have to cover this story again until she gets released back into the general public a number of years from now.
Honestly, I don't know what I'm going to do with myself if I don't cover this story. There's nothing left. Come on.
You got all that free time now. Maybe you can write a book.
Yeah, right.
Okay, by the way, you mentioned Carol Bartz. I suspect that that quote you gave me, you had taken out all the profanity, knowing Carol.
Famously so, absolutely. What a wonderful interview and a color.
I once did a poll of all my fellow journalists in the Valley on who they would like to, what CEO they would like to go out drinking with. 100% Carol Bartz.
Very much
One of
so. I
my favorite people.
I agree. I agree.
So anyway, that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and YouTube. The heat's coming to Silicon Valley this weekend. Have a great time. Bye-bye.